Hello everyone, welcome back to CIA Academy YouTube channel. So in my last video I talked about the 5 fundamental truths about the market as explained by Mark Douglas in his book Trading in the Zone, and I've actually explained 2 of it, the first and the second truth. So in this video I'm going to be doing a continuation of the 5 fundamental truths about the market. I've explained the first truth that said that what anything can happen in the market, and the second truth where we talked about you don't need to know what will happen in the market. So today I'll be talking about the remaining 3 fundamental truths about the market. So let's dive into it. Now, the number 3rd fundamental truth about the market is that wins and losses are random. Wins and losses are random. In trading, you need to know that distribution of wins and losses does not follow a linear or predictable pattern. Here is a random sketch of how a typical trading strategy should perform. You have lose, win, loss, wins, wins, loss, wins, loss, loss. This is actually like a sketch, just like a random sketch. But what's the main focus, the main point I want you to grab there is that the wins and losses in a trade does not form a linear pattern or a predictable pattern that it will now be like win, 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 or lose, 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 lose. No. Do you understand? Now, having this particular knowledge and knowing this will encourage you to have a probability mindset and also encourage you to have a risk to reward ratio mindset. So once you understand this, you'll be able to manage your risk very well. Another thing is that it will also help you to avoid the trap of expecting consistent runs. To help you to avoid the trap of expecting consistent runs, that because you are seeing wins, you know, like the third one too will be a win. Do you understand? No, it's not like that. So always know this truth, that what wins and losses are random. Wins and losses are random in the market. Now, the 4th fundamental truth is that an edge in the market, an edge means a higher probability of winning. Having an edge means having a higher probability of winning. Now, having an edge from your strategy, maybe you are the type that is using SMC strategy, or you are using Ichimoku strategy, or you are using volume strategy, you are using retail strategy, you are using indicators, anything. So having an edge from that your particular strategy means that you've identified some factors and conditions that increases the likelihood of profitable trades. Let's say example, if you are the type that is using, let's say you are using SMC, you know that if X equals to Y in this particular trade, you know that okay, you will enter the market. You know that if X equals to Z is also true, and you can also use it to enter the market, but since it's not part of your trading plan, you are not going to enter the market with it. Do you understand? So having an edge means that you already know that if X equals to Y, then the market will buy, therefore you will enter the market. So now having this particular edge in the market due to your strategy doesn't mean that you will not be wrong in the particular trade, or you will not have losing trades. No, it doesn't mean like that, but it provides you an advantage over a series of trades that can lead to long-term profits. Do you understand? Thank you very much. So that's how that one is. Now, what's the importance of having an edge? Now, the only way you can have an edge is by you understanding technical analysis very well. You already know the technical analysis. You don't need to be moving from one analysis to another. You don't need to be moving from one strategy to another. If it's only one strategy you want to take that strategy, master that strategy very well, develop an edge with that strategy. So once you have that edge over that strategy, on the long term and on the long run, you are going to make what? Profits. Now, what's the importance of having an edge over your own strategy? Number 1 is that it will give you the confidence to enter trades. It will give you the confidence to enter trades. You know that, okay, this particular thing, this is a signal, this is a sign that I'm saying. If I see this thing in my strategy, it means the market will buy. So it will give you the confidence to enter the market. Now, another thing is that it will help you to stick to your approach. It will help you to stick to your approach. You will not be moving from one place to another. Once you have your edge already, it will help you to stick to your approach. Number third is that the third advantage of having an edge is that you will not be swayed by short-term outcome. You are not going to be swayed by short-term outcome. Let's say you see that X equals Y. I told you that having an edge doesn't mean you have a consistent runs, or that you not be having a losing trades, or that you can't be wrong at any point in time. But all these ones, having that edge will help you to know that, okay, if you lose, all those ones are short-term outcome. If you are still seeing that thing, that particular concept or that particular signal, and you are still taking it, you are still going towards to make profit. Why? Because you've already back tested that strategy, you've seen the signal, and the thing is working very well. So that edge will make you to still be profitable on the long run, and you not be swayed or be discouraged or be fearful by short-term outcome. So that's that about having an edge in the market. Now, the fifth fundamental truth about the market, as explained by Mark Douglas, is that every instant in the market is unique. Every instant in the market is unique. Mark Douglas emphasized that each moment in the market is distinct and it should be treated as such. Each moment in the market is distinct, it has its own peculiarity, and it should be treated as such. Market conditions, price actions, participant behaviors are constantly evolving and cannot be replicated. That is, if historically the market is bullish, it's a probability and not a certainty that the next move will also be bullish. Therefore, as a trader and as someone that is attaining and that is willing to be profitable in the market, you must be open-minded and don't rely solely on past experiences. You have to approach your analysis with a focus on the present moment. That's why, if possible, is for you to combine fundamental analysis with technical analysis. This one will give you more edge about the market, and it will give you more confidence, and on the long run you are going to be profitable. I'm very sure you understood this. So that's that about the market. So those are the 5 fundamental truths that was emphasized by Mark Douglas in his book. So in my next video, I'm going to be telling you other things that I have gained and other useful tips in the Trading in the Zone psychology book.